All right, guys, today we're going to talk about a new futures product which has me stoked that made its debut this week, and that's MicroBitcoin futures. Let's get to it. An offshoot of the regular Bitcoin futures contract, MicroBTC gives retail investors who don't have $117,000 to risk on one position an opportunity to play Bitcoin through futures. At 1/50th the size of the current Bitcoin futures contract, instead of the currently 117K margin requirement at the time of recording this video, the new micro contract will require only about 2,300. This requirement fluctuates with the change in the price of Bitcoin as well as with your broker. So why play this instead of Bitcoin itself? So there's pros and cons to it. Well, to be more specific, several pros and one con. Let's start with the pros. So let's take a look at an example. Margin requirement is $2,300 per contract, and for every $100 move in Bitcoin, each contract moves $10. That means 10 contracts represents a 1-to-1 move with Bitcoin, while only having to put up $23,000. So let's assume we buy 10 contracts. So therefore we put up $23,000. If Bitcoin were to double up from this point, from 55K to 110K, this would represent a $55,000 profit for us playing this futures contract. Conversely, if we were to put in 23K into the real Bitcoin through a crypto exchange, we would have a 23K profit. You can see why this contract is truly a godsend for us who are super bullish on Bitcoin. But don't forget, you would lose more money too if the price goes against you than if you bought the physical Bitcoin, as is the case with any futures contract due to leverage. Outages on crypto exchanges is another reason. Crypto exchanges still experience outages across the industry when we're in the middle of a huge rally or conversely a big crash. It's really astounding to me how the largest crypto exchanges still experience these seemingly elementary mishaps on a near monthly basis during rally years, something that is extremely rare with traditional brokerages, especially in established names like Fidelity and Schwab, although not as rare with the newer ones, one in particular which shall remain nameless. And another reason is the risk of leaving big amounts of your crypto on the exchange. The lesser known names are especially prone to hacking, but that's not to say the bigger ones are foolproof. The way I see it, I sleep a little more soundly at night with my money parked in TD Ameritrade as opposed to a crypto exchange or a hot wallet. The final reason is the fees. This will cost about $500 per contract per order on TD Ameritrade, and that's going to fluctuate with a couple of dollars more or less for the other brokers, and this is much lower than the 0.5 to 1.5% fees we normally see on crypto exchanges, saving you more than a few pennies in the long run, especially if you plan to trade this actively. As for the cons, the only one I can think of, and if you can think of any others, feel free to comment them, is that being a futures contract, you cannot trade it past 5 p.m. on a Friday until 6 p.m. Sunday, Eastern Standard Time. So the weekend is pretty much gone. This can be a big detractor for many people, but given all the pros listed before, I personally am willing to take that risk. I've done it for several years holding futures over the weekend, and I'm willing to do the same with this Bitcoin micro futures contract, especially when I'm long, as I intend to be. Alright guys, thanks for watching. Please hit the like and subscribe button and comment if you have any questions. Peace out.